We'll discuss that first. So shall we start? Guys, can you, my voice is proper, right? So if we talk about regulator, it means any government institution, any government body who control regulation, control or design rules or regulation. See, actually, regulations pass in a democratic country. Regulation pass in parliament. If we have any parliamentary system, they actually pass regulations in parliament. All right. And parliaments, their respective ministry. If I talk about India, we have commerce ministry, we have finance ministry. So it is a responsibility of finance ministry to do some research and design regulations around it. Then table that regulations in the parliament, discuss that regulations. Let's have a debate around it, and finally take the approval from the president or governor or whatever system that we have. So we'll take approval from them and will impose restrictions. That is a one aspect. It means parliament of that particular country, basically they design laws, right? So they are policy maker. Second, apart from this, first design laws or rules or regulation. Let's say you have designed, assume it, you have a Basel framework, which is one. What is this Basel? Basel is just a regulation, banking regulation. We'll discuss that in details. Banking regulation, like how bank can operate, let's say day-to-day operations, how bank can raise funds from the let's say deposit holders, how depositors money bank can utilize in a proper way, how bank can maintain or ensure liquidity, enough liquidity in the bank. All right. So this all frameworks and regulations that, as I said, it will already announced in parliament of that particular country, or maybe whatever system that you have, maybe federal government, parliament, congress. There are a number of that systems that you would see in the world. But see, the government bodies, they announce it and impose it. After that, they can appoint a body. Parliament can appoint body, so it should be government body, independent government body. So for example, if I talk about India, we have RBI, we have a SEBI, all right. We have even different bodies for different market. If I talk about insurance market, we have a IRDA, Insurance Regulatory of India. We have a TRAI, right? See, telecom ministry bring that regulations and try ensure it implementation, execution, tracking and monitoring. If I talk about insurance, we have a IRDA, Insurance Regulatory Development Authority, who bring means insurance finance ministry basically bring that rules and regulations, and then IRDA monitor it and execute or ensure implementation and even tracking. All right. But if I talk about SEBI, again, finance ministry works around it on means different regulations and send it the data to the SEBI, and SEBI will take care of it. It can be related to foreign exchange, stock market exchange, or different exchanges. Same if I talk about RBI, if anything related to money market, money market or foreign transactions. It's a central bank basically, or even if it is related with the cross-border transactions. So RBI will take a control of it. But regulations, finance ministry can consult, or RBI can also decide. And apart from this, RBI control the entire banking system of India. So see, if I talk about America, if I talk about Europe, Bank of England has a power of, like RBI of Britain, and they take care of it, all regulations and everything. If I talk about America, yeah, United States, they have their federal body, right? They take care of this banking systems, regulations and all, and even Bank of America also intervene in all of this matters. All right. So my now point here is, see, now without regulation you cannot bring transparency. That is a one thing. And in that that regulations, if you don't have a certain norms which can help system to sustain, right, again that regulation has no value. Initially, means in past, what we have seen scandal, banking scandal. Let me just decode few scandals so that you can understand the importance of regulations. Let's talk about, means recent, few things happened, so that you can understand the importance of regulations as well as the regulatory bodies importance as well. So I would like to take a reference over here of 2008 Great Recession year. So what happened in this year? See, actual that recession popped up in 1991, not in India, because India was facing lots of issue in the domestic ground, because the current government was looking for a liberal policy. They were facing some liquidity issues, foreign reserves, because India had so many issues at that time, and they were facing it, right? And they took a even decision like liberal. It means open the door for foreign investments. Foreign investment, it means FDI, then foreign portfolio investments, and even means any other country or countries or companies basically, if they want to do business, they can. So they just open the door, and that's what we even recognize that year as a or the time as a open door policy, which was enacted by the Narasimha Rao and Manmohan Singh, and allow investors or companies to invest in India or to do business in India, so that we'll get some foreign reserve or payments in euro, USD, JPY, and in other currencies, because euro, USD, JPY, and other there are one more currency which is China's currency and even Russian currency, and one more is ZBP. Actually, they have a dominance in this particular world. Apart from that, the Middle East countries, they have their different currencies, and their currency is also strong, like Kuwait currency and all. If you talk about, they have also means strong background. But even Kuwait currency and all, so it's not a globally, means at that time it wasn't like globally recognized currency. But euro, USD, JPY, they are like again still dominating everywhere. But nowadays the trend has been changed, that is something different. So I'm talking about 1991 situation. See, world was facing problem, even India was also facing problems. There were few dominating currencies as well, so they were actually dominating to this, and without this currency, survival of any nation, it was difficult. Means nation was in risk. Don't make it the statement politically that some government did this or did that, right? Even if the NDA government was there, so they would have taken the same step. So that doesn't make any sense to make any false or fake statement. So I'm not this is not a, again, I'm just giving disclaimer, this is not a political session, it's just a learning session, so take it only from a learning perspective, knowledge perspective, right? So nation was in risk, and at that time, so that government took a steps and bring some policies around it. All right, policies around it, it means FDI policy, which was announced in parliament, and all means other governments like opposition governments or all other governments, they casted vote and ensure that implementation of FDI policy and FA policy, and finally that has been enacted, and we allowed foreign direct investments in India. Again, this policy has few drawbacks and even few positive sides as well, and every coin will have two sides. One is due to FDI, domestic competition at that time, it was killed. It was very tough to compete with international players. But on other hand, due to this FDI and FPI, we could generate more jobs, and even we could, ramp up our foreign reserves. As I said, nation was in risk. It means at that time, the condition was like without Euro, USD, GBP, you cannot execute transactions at international level. We will have two things. One, you can collateralize countries' assets like port or land. You can give it to them, means to the counterparts or to the companies or any governments, and ask them to do business over here. That was one option. Second is, if you have a foreign reserve, then whatever needs of your nation is, you can easily buy or export or import whatever that durable goods, or let's say daily basic needs goods, whatever that you are looking for, you can execute it, right? It was means that it was a high time basically, but at that time also FDI or FPI or foreign investments which was allowed. But now why this background is important, you will understand this. Okay, the irony of this regulations, why which are important, and why again the regulations monitoring is also important, you will understand this. Then finally, means after 1991 1993, this in basically US, the revolution was started. It was a .net, sorry, .net, not something made, internet based businesses which was booming. So it means suddenly we have seen that internet based companies, basically it was started highly growing, and there was no policies around it even as well. Like nowadays, if you see, we have in every sector we have a ministry. In manufacturing, IT, banking, telecom, insurance, stock market, in every industry we have ministry, and ministry ensure that best regulations to be implemented for betterment of the country, nation, or society. At that time, time was very high for even world, because world was see, I'm not talking about European countries and US, because since beginning they were like developed countries and all. But if I talk about India, if you compare India, still even you means today also you cannot compare it. America got independence 250 years back. If you compare with India, Europe, they ruled across world, and if you compare India with them, so it won't be like fair comparison, like apple to apple comparison. Anyways, that's a different story. But now if we talk about this internet based businesses, suddenly they registered huge growth in the startups, then different companies, and nobody even paid attention. So everyone was thinking like, okay, so now it's the internet era, so that we'll get more jobs, and that happened even. I'm not saying that. See, for everything you would see certain trends. Trends that will boom and grow, and once the trend has gone, then you might see down in that particular field. So it's a continuous cycle. So we cannot blame to the cycle even why this happened, because in a boom 1993 to 2000, so it was like golden time for this internet based businesses. Everyone was getting job, the enough liquidity we have experienced, right? So we have experienced everything. Economy was growing. The dominance of US market we have seen across globe. US was dominating because through this internet businesses, they expanded their network. companies like Google, Microsoft, they expanded their base. The other companies also, they expanded their business base. Basically US based companies, they expanded their base. Even banks, they expanded their base and reached countries like India or APAC countries or European Middle East countries and any other corner of the world. So it means world was growing, all right. And if you see, if something which is growing and if you ignore the signals, or if you let's say lose, or if you don't pay attention on regulations or framework, so you might see huge risk in coming time. And it is a very evident that, see, that every, for example, let's take the example of helmets. Government already enacted that we should wear a helmet, or maybe we should carry this or that, or we should have a license. See, for a time being, we'll say, okay, I don't want this helmet, I don't care. But if something happened with you, and let's say just because of helmet, if you have, let's say, would have wear helmet, then you might you could save yourself from the big injury, maybe some brain injuries and all, that you can avoid it, correct? But if that happened with you, then only you will realize it. I would have wear, then maybe the injury which is, let's say, which was happened, I could have maybe avoided, or the injury would be little different, not that much critical. Then we'll realize it. So same thing you can apply here as well. If you have a regulations in place or framework in place, if we ignore that, or if we don't pay attention, or let's say if we don't follow it, then you might face big impact, or maybe grave ramifications as well. Why I'm saying this now, I'll decode it. So then from 2000 to 2003, 2000 to 2003, or 2000 to 2008, this time was little tough for US banks. So why this suddenly happened? The market was growing, everything was going well. See, some of the other person, like every student was or wanted to do some internet based courses and get a job in the internet based companies, right? So why few experts called it that internet was just a bubble and that busted finally here? Why it was bubble? See, I don't believe on this such a terminologies, because I'm also one expert. What I believe, if something, let's say, happening throughout that process, that it was the responsibility of governments or regulatory bodies to ensure that what is happening around it and control that activities, or maybe impose some restrictions and ensure this will nowadays, if you see that Coven, Evel, or Fed government bodies or RBIs, so they ensure it, means monetary control or announcement of interest rates, or imposing restrictions on banks, different banks, right? Recently, go and check the news that RBI imposed restrictions on Kotak Bank. Before this, they imposed restrictions on all other banks, including yes banks and all. So this type of enactment or rules implementation, or to verifying whether that banks or institutions are following rules or not, this is a very important that process. Because see, any government can announce rules, but what about monitoring? What about controlling measures? What about preventive actions? Last week we have seen that RBI that shut down payment bank, that Paytm payment bank. Why? Because that bank was not following RBI norms. It is important to ensure. See, why RBI did might be, if you politicize this, then you can take a different meanings. Maybe that government want to show something or this or that. But it is important to ensure that that Paytm or any bank, they should not violate any rules. If they violate it, what will happen now? I'll decode it now, so that you can understand the background or understand means regulatory requirement as well. So another drawbacks, or I would say like negative side, that I would like to discuss about the regulatories. Way back in 2000, 2002 or maybe 2000 or 19th century, the regulatory bodies, power, if you see, it was not that means powerful, I would say. They were in place with in a few countries, but the power was something, uh, it was not like that means they were able to take a strong actions against this or that company or maybe any, specific, I would say, any means any organization. Why? Because of maybe political intervention, maybe lack of transparency, or maybe due to some other factors. It was there. Now, if you see, the scenarios are different. Now, immediately you can expose anyone on social media and take action against that person. So it's a very quick process. But in past, we had no resources, technology, and all other things. So we cannot blame to that situation. Now we have a different situation, different time. We can bring more transparency in the system. All right. So now, if we talk about this 2008, so finally means we reach to this, 2008 situation, and here we have seen suddenly Bank of America and AIG Group. AIG Group, it means insurance, America's insurance group. AIG Group, they announced bankruptcy. See, AIG Group was one of the largest insurance company in the world. And if, let's say, largest insurer, if announced bankrupt or failed, then you would see disastrous situation across country or across globe even. So it's a very, very important to ensure that the government has protected to the insurance business. Why? I'll tell you this. In this, period only, we have seen the importance of regulation. During this period only, the ABS and MBS. So we have seen that, were introduced first, and then apart from this, other instruments also come into picture like CDS, collateral default swaps come into existence. Then apart from this, during this period only, we got to know M2M, mark to market. See, if you see any tough situation or time that we have, then always people or experts, they'll try to find a better way. And throughout that situation, there will be two things. One, maybe he will lose everything. Otherwise, he will invent something. And through this, this big transition, or I would say recession, we have got ABS, MBS, or collateralization process, mark to market. Mark to market, it means earlier we have discussed in our collateralization, we got mark to market as well. Why mark to market is important, why CDS is important, and why Basel framework is also important. Basel 1 or Basel 2 is important. We got to know, means world got to know that why the regulatory framework is important. Why? We'll discuss that now. See, why this AIG group announced failed, or why this AIG group got failed. See, when the this internet era got started, means the duration, if you see 1991 or 90th century to 2003, it was a golden time, as I said. Not for India, of course, but for India, it was a transition period. Transition period, it means India took a big bold steps and allow investors, and also that happened in the background. But world like European countries or especially US, it was a golden time for them because suddenly they got a big boom in internet with businesses. And during this period only, lots of people, they got a job. And suddenly what we have seen, like, demand increased in real estate sector. So every IT professional was, taking job in a company and acquiring multiple properties. Multiple, it means multiple. 2, 3, 4, 5, 6. Let's say property A, property B. Right? It was like big boom. Let's say this person is earning $2,000 per month. Then he or she was acquiring properties like this on loan. Let's say loan properties 1,50,000 USD. And that is also on EMI. EMI payment was, let's say, 700, and remaining amount it was saving for daily needs. All right, expense. This is how people suddenly started acquiring properties. See, there was no harm in acquisition of properties, but you know it. If you see a people, they always, if they target to the one thing, or maybe let's say if all assume it, if all people, if they join only IT industry, or maybe let's say banking jobs. See, let me tell you something. If suddenly, if you see supply of laborers or employees in job market, then that will affect on price. Price would be around 5,000 or 10,000, rupees per month only. Now, why companies are offering higher salaries? Just because of two things. One is government norms. Government doesn't allow to, offer salary, minimum salary means below the minimum salary range. And second thing is the shortage of laborers, means skilled laborers. That's why companies are offering higher salaries. What if you have a huge supply, means skilled labor supply in the market, that will affect on price. That will affect on your salary. So same thing which has been happened. Throughout this process, if you see, when we apply for a job now, we have a CIBIL. Correct. We have now even checked the other factors as well, background. Nowadays, companies check companies or jobs, stability as well. Company CIBIL also. They check it. Nowadays, we have been totally, different process. We checked everything. But at that time, only on the basis of salary, loan was offered. Then that person acquired properties, multiple properties. As I said, to acquire in properties, there was no problem at all. But the problem was in system. Problem was with CIBIL. Problem was with background. Problem was with the companies which was recently, they have incorporated their office and offered huge salaries to the people. So suddenly inflow of money was increased or pump up in the market, and that money was utilized to acquire properties. So it means in that process there was no sustainability. Sustainability, it means long-term, value or impact. It was just a short or temporary phase. All right. And due to that phase, what happened when this bubble busted? Suddenly, this person's income means from 2000 started, coming down to around 200 or 100 rupees per month. Now you tell me, if my expense is around 600, and suddenly if I'm not earning anything and I'm getting salary of only, let's say, 100 or 200 rupees, because see, at that time everyone was doing that internet related courses and certificates, and then suddenly supply of labor increased, and that affected on job market. And suddenly, that salary trend went down, and people, they were earning very less. People lost job due to this, and that actually impacted a lot. Why? Now, if you see here, this person took a loan. Here was the twist. And when let's say this person lost the job, he was unable to repay the loan, principal and interest payment. Let's say here, Bank of, let's say America, let's say, was the lender of this particular property. If let's say this person lost job, so it means if A lost job, then it will affect on principal and interest payment. Then suddenly cash flow, which will affect. All right. And then that will directly affect the Bank of America's cash flow. And let's say Bank of America had raised fund from, again, common people like us through deposit process. And that deposit was utilize as a loan to to acquire property. Eventually, bank had a guarantee of this RTS, right to sell off this document, means property rights. But now you tell me, suddenly, people started losing jobs. So everyone was looking for, like, how to sell property and recover the money so that people can survive. In US and Europe, see, in India only, we have this, bullshit theory, which is to save some property for, next generation and all. But in US and UK market or European market, I believe it's a very open market. They believe on only this generation. If you are alive, it means you can utilize your money to, survive for yourself, and you can live your life better way. But in India or, countries like India, we have a different stories that we always believe to, save monies for next generation and all. So that's a different story again. But here, if you see, when this event triggered, people started losing job, bank could have control the new disbursement of loans. But suddenly that AIG group, insurance company group, entered into this particular, space, and they provoked lenders, right? AIG group, it means America's, big, largest insurance company. They provoked basically to companies who have already offered loan. They have provoked in a way, look, if you offered more loans, even if your, let's say, borrower get defaults, that's fine. We can still provide you assurance that you will get your money back because we'll sell you protection. And here that we have got new term, which is CDS. AIG group, America's group, they sold this ADS to the Bank of America, not only Bank of America, but other banks as well, like US based banks, including Lehman Brothers crisis happened during this period only. There were other banks as well, apart from, I'm not able to recall the exact name, but along with along with that bank, Lehman and Brothers, there were many more other banks as well, and those banks were like well reputed and established bank. But those banks like Lehman and Brothers, they offer, funding, means huge fundings to the borrowers and acquire properties. See, ultimately, now if I tell you a truth, for a bank, if you take a control of your property, then how will you run your bank show? You will not. Because bank's business is not to acquire properties. Understand this first. Bank's business is to raise fundings, invest, and multiply return. That's all. Every American, means the job seeker or job whosoever like person was seeking for a job, they were trying to sell that collateral, which is assets or property, to sell out. They wanted to sell it down in market and recover the money. And other people like whosoever holding properties, they directly announce bankrupt and surrender their securities or properties. And then apart from this, as I said, the CDS was also one of the worst decision, because critics or the expert, they have already criticized actually AIG group that provoked companies like to sell loans in the market. Don't worry, we'll take a risk and we'll provide it to you. But when this crisis started from 2003, 2004, 5, 6, and 7. AIG group, it was fully busy in settling claims, because in a Josh they sold CDS and bank purchased it even as well. And once the bank purchased protection, like for example, let's say you have purchased term loan and even accident term insurance of your life and term insurance for your job. For example, let's say you lose a job again, you will get a claim from insurance company. And if something happened with your life, again that insurance company will process amounts to you. So it means you are safe. The same way, and in the same way, every bank was feeling like, okay, they are safe. Even if they offer loans, their loans are safe because insurance company will take a risk and settle the amount. And eventually that AIG group was a government company. But what happened at the end? So beginning of the year 2008, see, bank announced it that they are facing some liquidity issue due to CDS claim. Because in 4 years they settled as much as claims that they can settle. They settled it, and actually at that time AIZ group was in loss, and their all accounts dried up. From January to June or June to July, slowly and steadily that news broke, and then finally they announced it. We don't have an amount to pay. We can't do anything. And suddenly prices of properties dropped. Let's say this property value was assumed at 1 lakh USD. It was dropped like 1000 USD. But still no one was ready to buy it back. Why? Because people or that job holders or seeker, they were already lost their money and all other things in this process. So this is how this crisis happened. So out of this crisis, what you can learn from a regulatory perspective? Two things. If I talk from a bank perspective, liquidity matter a lot. Liquidity matter a lot. Second, capital utilization. Third, fund allocation. Fourth, governance practices. Other points, reporting. Role of government and regulatory bodies. See, these points come out as a resolution. Why? Because nobody paid attention on liquidity, whether there is a liquidity available in real estate market or not. So eventually there was no liquidity, but still, investors, they invested a lot. Institutions, they invested a lot. But what happened? Eventually that liquidity dried out and market crashed. And finally, government announced that we are in a recession. Same for capital utilization as well. If a bank has 100 rupees, let's say you're a bank, you have decided to raise the funds. Let's say you are a bank of, let's say, America. First, let's say if you have if you have raised as a deposit from this person, and let's say you have another counterparty which is for a loan. So make sure you don't transfer this exact amount, which is this one. Don't do this. This is not a good practice. If you have a $10,000 or $100K or $10K in your pocket, means in a bank's pocket, so make sure you have a proper utilization. Proper utilization, it means always you can carry cash, maybe up to 2,000, and remaining that you can invest. Invest, it means in terms of two ways. One is liquid investments and another one is long-term investments. Maybe 6,000 that you can invest in long-term investments and 2,000 you can invest in liquid investments. If you have such strategies, then you can manage withdrawal request, interest payments, liquidity. So basically your bank's position would be healthy, or financial institutions position would be very healthy, so that you can maintain liquidity, you can maintain cash, you can maintain investments. So overall, if you see, you can maintain balance. Same thing if this would have happened at during that as I said, recession period, so easily we could have avoided it. But as I said, it was the failure of even regulator as well. See, no government will take this responsibility. Government bodies and governments, they always criticize to the external factors or maybe to other factors, because they just want to capitulate from the risk risk, or I would say they don't want to take a responsibility at all. If they take a responsibility, then their government will criticize, the department will criticize. So they'll not take a, that blame. They'll always figure it out a way. They criticize, means their governments criticize, they criticize to the CDS, they criticize to the AIG, that AIG announced CDS and that's what it led. Few experts, they criticize to the internet, that boomed and the companies established and all, this thing happened or that thing. Again, my point is to issue the certificates of, company or any that instruments and all, it was a responsibility of government. Why government allowed with such companies? Why, means what was the role of government? Nobody was, even today also, if you see, nobody criticized the government. It was the actually failure of a government, if you say it. But nobody will blame it, because no governments want to blame that something happened in my regime or under my regime. No government wanted, but it was a failure of a government. If something was rising or developing, see, if something good initiative happened, if I talk about 1981, the government is ready to take a credit that just because of this it happened. But same in US, if I talk about it, the entire US failed and led to that big global recession. That again, their government, that failure, they already, means they shifted on EIG and CDS and real estate market. All right. So this is what things happen in this world. But if I talk about this framework like cash investments, liquid investments, long terms and all, so that all which has been already means given in the Basel 1 and Basel 2. And we have now regulatory bodies or government bodies, non-government bodies that all come into picture and they monitor everything. If I talk about another part is which is own contribution. So it's mandated to have own contribution as well, maybe 10%, 20%, 50%. If you want to start your own bank, without your own money, you cannot establish your bank. Then minimum, let's say, minimum, cash level. Minimum cash level. It can be, let's say, if you have total 10,000. So this cash level, bank can, that RBI can increase this, maybe let's say 20%, 30%, 40%, depends on the country's, monetary policy or money market situations and all, or inflation or recession, situations and all. Nowadays, we have a regulatory bodies. They are ensuring inflation, recession, deflation, slowdown, all other activities. They are closely monitoring it. But if I talk about past, that wasn't happened on time, and we have seen some economic crisis or events as well. So as I said, out of all, out of this event or that whatever recession or incident happened, we can learn few things. And that was, as I said, the regulations plays crucial role. Then monitoring and the tracking of regulations at company level or bank level or industry level, again, which is very important. And again, the government's responsibility is like to implement and take a responsibility of failure as well, and try to impose more stringent or strict regulations in place to avoid any potential risk. And again, that failure taught us, like, it was the failure of government agencies. It was their responsibility to take care and ensure what regulations or what instrument that we are launching and all right. So this was all about regulations, but we'll discuss through PPT part after the break. So we'll take a break now here, and we'll cover further part through PPT. I just wanted to give you an background why it is important, but I'll take a 5 to 6 minutes to, and then we'll take a 20 minutes break, because next 1 hour I'll walk you through PPT only. So I would like to give you one example apart from this crisis. Recently happened, it means in 2023, I believe, or 2023, I believe. So there was one crisis happened, which is Signature Bank. Then there is one more bank, which is Public Bank. And there is one more bank not able to collapse, SVB Bank. Yeah. See why regulations are important. Now you can understand it here. Why this SVB bank crisis happened? If you see, bank received a deposit with, let's say, bank received $100K deposit at 6% interest payment, and at other hand, bank was only able to sold only 20,000 K. See, in reality, figures was different, but I'm just giving you example here. Let's say at 10%. Here, if you calculate the liability, interest payment liability would be around 6%. It means 60,000. And here, income on loans, it goes around 2,000. See, net difference, if you see, it would be around 58,000. So how bank will pay it from this, that pocket? Just imagine it. It is not possible at all, right? Otherwise, means bank will collapse. Eventually, if you have a, let's say, net liability is high, and if you don't have your fund, then you would be in trouble. That is one thing. Second, that you can understand is, see, let's say bank was not able to sell the loans. That was a bank's failure. Second thing, the diverted money, means remaining money, they invested 20,000 in loan market, and remaining 80,000 money they invested in bonds. Right? They invested in bonds. But unfortunately, in US, bonds yields was a very low. So it means that bond market was also facing, issues, and they'll lose almost $1.2 billion something, because if you see, that market was offering only 1 or 2% return, 1 or 2% return, which was very low return on investments. And as compared to, deposit growth, if you see, the deposit growth was, which is very high, and bank had no plan for expansion or invest that amount in the market. And when the other side, means if you see what happened actually, just because of liquidity, if you see, bank collapsed. They invested in bonds, and bonds has a term like 2 years, 3 years, let's say 2 years, and suddenly post pandemic startups, they starting, because this SVB bank famously was known for like startups and mid-sized companies. Then companies started withdrawing their amounts. And then that, triggered that bank had a no liquidity. And when that news got leaked, then everyone was asking bank to repay the money. Then finally bank sealed the accounts because they had invested amount in bonds, and bonds had a low yield in the market. Trust me, for a European Union unit, SVB sold out at €1. Entire that SVB, Europe business sold at $1 only. See that? And this crisis happened because of liquidity management, because of the balance which was not maintained, means deposit and loans balance which was not maintained. See, if you don't have a plan, then don't accept deposit. You can tell your customer, we don't want to offer, we don't want to take a deposit further now because we have no plan. To accept deposit, it's not a mandate. If you don't have a plan for a business, then why you are taking it? If you are taking deposit and if you don't have a plan for investments, then there is an issue. And definitely you would face grave ramifications. Same Signature Bank, Public Bank, and SVB Bank, if you go back and check their history, you would find similar problems, and these problems because of regulations. All right. Yeah, this was all about the background of regulations. I'm done with this regulations background, but after the break, we have a PPT with us. I'll walk you through PPT. So take a break for 24 minutes. If you, I'll allow you now, ask questions as well. If you have any questions, you can ask me. Otherwise, we'll take a break and we'll connect at 10, and we'll spend 1 hour on PPT to see how regulations means we have a name of the regulations and all. All right. So any question, guys? Come on. If you have any questions, you can ask me now.